Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Apple report from Monday, April 24th, 2023. Before we jump into all the charts, just want to encourage you to please click like if you haven't already. It does help us get found on YouTube, and subscribe to the Wicked Stocks YouTube channel. You'll be provided notification each and every time new content has been uploaded. And that includes the daily Tesla and daily Apple report and the occasional free stock pick. We put one out last week on end phase. You might check that out. If you do see that, just know that we put two of those out every week on our subscription platform at wickedstocks.com that you never see on YouTube. Two individual stock picks every week. Wickedstocks.com subscription package also includes the daily Triple Q, the daily SPY report, and the weekly S&P 500, NASDAQ 100, and long bond ETF, the TLT, all that for a reasonable $47 a month. And, you've got a 5-day free trial that comes with that. So if you don't like what you see within 5 days, you can cancel the subscription. You won't be charged on your card. So let's jump into the charts here. We are closing in on the targeted 171.52 channel top. When we tested the channel bottom roughly in early January, we were mentioning how this formation should be considered in reach by some point in 23. And I don't have the well, here we go. Yeah, this actually says a lot here. About a month later, we gapped and closed above this long-term descending channel top at 135.25. That put it into the 3 to 5 month likelihood. And then just recently, about a month ago, we pushed through finally the upper 150s, low 160s, a 5/8 Fibonacci, long-term speed line. Some of these levels have been changed, their weightings. I'll get to that in just a moment. But we are closing in on this area. I don't know if we'll test it this week, but if we close above 171.52 this week, and that should be by a 1% margin, then we're in a whole nother situation where longer-term bullish continuation would be expected to the 216.91 channel top. This could take the better part of a year. I'm going to call it 5 to 8 months. Could take longer depending. One of the first tests will be 182.94, the all-time high from January of 22, where we could top out for a month, fall back to 171.52, so forth and so on. But I don't want to get too ahead of myself here. But that is our overhead resistance, and we're closing in on it. And these formations have a way of sort of halting trade even before you test them. We've seen that now for the last few days. We've fallen off. Let's get to the day itself. There's a lot to be said in this chart. We had that former channel top coming down that you have to go back to early last week when we gapped above it. It held roughly prior to that for several days. We fell back to it on Friday, closed right at it. There's no sell signal coming into Monday because we've got 164.89. If you see here to the right, that is session containment with an up pivot, meaning the market can trade up from here as we move through the day and even into later week. And our down pivot now is an extreme channel bottom just below that at 164.50. So it all comes together here in the upper half of the 164 handle, able to contain daily selling pressures potentially into mid to later week. That's a tough one to assume, but it actually could happen. Of course, upside today, I've got 166.98. That is this short-term channel bottom, about a weak channel that can contain, and I say weak, I mean W-E-E-K, not W-E-A-K, but it can contain intraday strength, 166.98. Possibly for the day. If we push through 166.98, I think we have a good low for the day. Now, whether we can claw our way all the way up to new highs at 169.84 intraday is another question altogether. I will say that closing today above 166.98 should actually yield the 169.84 simple trend line tomorrow, Tuesday, where we can top out for the day. And that is getting very close to the 171.52 long-term target, that long-term channel top I showed at the top of the video. And I'm going to keep this here through the week. 168.63 actually precedes 169.84. That is the 1% zone on that long-term channel structure on the daily chart. So when you push into the 1% zone, and I'll bet is very close to this other channel formation that I'm not quite exactly sure where it is right now. So as we get to 168.63, just know we are in the zone. The zone to take profits on any 170 or 172 calls you may have purchased, either from it could have been as early as January. It could have been as early as February when we gapped above this formation, and it could have been as recently as 3 or 4 weeks ago when we pushed through, the upper 150s, low 160s. Whatever the case might be, when we push into the 171.35 to 171.52 area, or even at 168.63, as I say, 1% of that zone, that is your profit-taking area and your short-setting zone if you're so inclined. The short-setting zone could be, if you're a near-term trader, let me actually get to that chart right now. I'm going to show you, so just hold that thought. If we're pushing into the low 170s, and you're taking profits on an out-of-the-money call, for instance, or you're long the stock and exiting that position, you're either now considering going short the stock or buying out-of-the-money puts. Let's take a look at the sequence of events here. I showed you 164.50 just a moment ago. This is our sell signal into later week. So if we break 164.50, FYI, I might as well talk the day itself. 162.98 is likely. That is a downside 50% Fibonacci over the last week and a half extremes. It could contain the balance of selling pressures for the day if we break or open below 164.50. And if we close below 164.50 over the next 1 to 3 days, I would expect 160.84. So the point I was making before with respect to the options trade, if you're pushing into the 168.63 area and you've been long out of the money calls from January, February, or the last month or so, that is not only your profit taking area, but you could set a short. And in the options world, that could mean buying 161 out of the money puts that don't expire for at least a week or two. That is the short term play. It could also mean, and keep in mind, this is a significant zone of resistance up here. This area, I don't know if I've said it in this video, but I've been saying it for months now, able to contain buying, I'm going to go to this one, able to contain buying through Q3, possibly the balance of the year, which is why I'm talking longer term now when I'm talking about these options plays. If we push into the 168.63 area, you could buy 161 out of the money calls that don't expire for at least a couple of weeks. You could also buy 153, 154 out of the money puts. Did I say calls before? I meant puts. Out of the money puts that don't expire for at least a month or two. You could potentially buy, when I say potentially, you could buy 142, 145 out of the money puts that don't expire for at least several months. This is the sequence of events that could play out after testing the low 170s long-term resistance. Now, yes, I've got speed lines coming up and all that, and I still have 154.72 down here weighted as a session containment level, but I've reevaluated, I've taken a look at the charts. The Apple, by the way, tends to honor channel formations a little better than the speed lines, although the speed lines are still a valid approach to support and resistance and trend identification, but this is the stair-step approach. If we push into that low 170s, 171.35 to 171.52, this is an area where 161 puts that don't expire for at least a couple of weeks, 153 puts that don't expire for at least a month, and 142, 144 puts that don't expire for at least several months. I'm not saying I would expect 141.71, that channel bottom, over the following 2 to 3 months, but I think that is in the realm of high possibility. Let's put it that way. And so each of these is a sequence. 160.84, let me get back to the week itself. We can bottom out at 160.84, FYI. I have it as a weekly support level. And from there, perhaps within 2 to 3 weeks, push back into the low 170s. That is the possibility here. So if we test 160.84, once again, you can reach for 171 out of the money calls that don't expire for at least a month. I think it would take more like 2 to 3 weeks, but at least a month. If we happen to test the low 170s sooner than later, this is the image that I will be looking at for the possible sequence of sell signals that could occur as we move into the third quarter. I don't know if there's really anything else that needs to be said. I could flesh out the day a little bit more. I'm going to go to this chart here. The 164 handle, decent support for the day, possibly into later week, above which 166.98 in reach, able to contain intraday strength. Pushing through 166.98 does allow 169.84 intraday, which is well inside that sell zone, that 1% zone for taking profits and setting shorts as we move into the third quarter. Downside today, if we happen to break or open below 164.50, 162.98, and if we close below 164.50, 160.84 expected Tuesday, Wednesday of this week, where we can bottom out not only for the week itself, but possibly through the rest of April as we could turn higher. And finally, if later this week we close below 160.84, we have a 2 to 3 week sell signal down to 152.21. And that is all I think that needs to be said. I will leave you with this image for the day itself. I'm past 10 minutes, don't like it, but there you have it. Please click like and subscribe and check out wickedstocks.com.